Hello traders. Today we want to discuss Elliott wave trader forecast price action of US dollar and Mexican peso. Elliott wave trader forecast price action of US dollar Mexican peso. We're on a monthly chart of the US dollar and Mexican peso. We want to start counting Elliott wave, all right? So recently you can see that there was an election in the United States, and there was discussion about, the Mexican peso, all right? And the general discussion, the general forecast was that the Mexican peso will be going down, will become very, very bearish, all right, in relation to the US dollar. In this tutorial, we're going to use the Elliott wave principle to forecast the future, all right, to forecast the next price action of the US dollar Mexican peso, all right. So when the US dollar is strengthening against the Mexican peso, this price action will be bullish because this is a US dollar Mexican peso. Right, but when the US dollar is weakening against the Mexican peso, all right, this price action will become bearish. So in this session here, the US dollar was weakening against the Mexican peso, but in this session here, the US dollar was strengthening against the Mexican peso. So this is the month of November 2016, because I'm recording this video today on the 20th of November 2016. You can see that this candlestick bar is not closed yet, but it's quite a bullish candlestick bar because of the election of the United States and also the election of Mr. Trump as the new president of the United States. Talking about the policy that Mr. Trump was talking about. All right, a lot of market participants were expecting the US dollar to continue to strengthen against the Mexican peso. All right, but when looking at the chart, because the price action does not lie, the price structure does not lie, we can see that since 2011, in fact since May 2011, the US dollar, from this point, the US dollar was strengthening against the Mexican peso. But during that time, all right, no one was talking about the election of Mr. Trump or anything else, but it was strengthening against the Mexican peso. You have to, if you go back a little bit into the past, you understand that from 2009 up to 2013, the Federal Reserve was busy devaluing, all right, the dollar. All right. So you can see during those times, from 2009, the US dollar was weakening against the Mexican peso. Here it is. All right. And then from 2013, the Federal Reserve starts saying to the market that they are coming to the end of what we call the quantitative easing, and which means they were coming to the end of the devaluation of the dollar. All right. Therefore, end of the devaluation of the dollar means that the dollar will start going up. All right, and the dollar was strengthening against the Mexican peso. All right. So you will see when I start counting my wave that you may disagree, and I will explain to you why some Elliott wave trader may disagree with my wave count, because I'm using a reference point 2013, the point where the Federal Reserve, all right, was ending the quantitative easing, was ending the devaluation of the dollar, all right. So we need to, this is what we are talking about. When we are using the Elliott wave principle, we need to use reference points. All right, very, very important. All right, so 2009, all right, to 2013, the Federal Reserve was devaluing the dollar. So most currency pair, all right, the Turkish lira, the Brazilian real, all right, the Mexican peso were strengthening against the US dollar when the US dollar was devalued. In 2013, the Federal Reserve has ended the devaluation and the dollar starts strengthening against other currency pair. All right. But today, as you can see, since 2013, the dollar was strengthening against the Mexican peso. But today, people were saying that the dollar will continue again forever. In fact, this is the expectation that it will go up as long as Mr. Trump is the president of the United States. The dollar will continue to strengthen against the Mexican peso. Now, let's use the Elliott principle to forecast the price action of the US dollar and the Mexican peso. So I will use 2013, and then I will use also, this point here in May 2011. I will also use that point to compare my wave count to other traders. So this is my starting point. This is the first Elliott wave. Now, by the way, there was a discussion about traders saying to me that we do not usually have a triangle in the second wave. Here again, we have an expanding triangle in the second wave. Now, I clarified that last time. I will clarify it one more time. Is that the general rule, the general teaching is that we do not see triangle in the second wave. What I recommend to traders, never say never, all right? And always understand that very often the Elliott wave horizontal triangle, the ABCDE triangle, the best place to see them very often will occur in the fourth Elliott wave because they happen so much in the fourth wave and they rarely take place in the second wave. In order to make a rule, you will say that it does not happen in the second wave, but it does sometimes and rarely. So don't be surprised sometimes when you see a triangle in the second wave. Now, at this stage, it's normal that we may have a bit of disagreement, but this is what I understand. This is what I say to traders, all right? It's up to traders to make their decisions. So this is okay, but this is a good point that the trader was making because there is a lot of teaching that you cannot see, all right, a triangle in the second wave, all right? So, but there are some exceptions. Here it is again. First wave, second wave is an expanding triangle here. And this is my third Elliott wave in orange, followed by the fourth wave, this one here. And this is the fifth Elliott wave right here, ending here. Now, you can see that I use the reference point 2013 to count my wave, all right? And I can assure you that there are other traders that have counted their wave from May 2011. So those traders will count this one here, first wave up to this point here. All right, pay attention. All right, color that. I'm going to the mind of other traders. They will say first wave followed by a flat correction. In the second wave, all the way down here, they will call this one the second wave. So for those traders who are using a reference point 2011, May 2011, but it is a mistake because you are counting Elliott wave. You want to use reference point. There are decisions that are made by the Federal Reserve and you do not want to forget it, all right? But also we'll go to the yearly chart and you will see that it is normal for some traders to use the reference point May 2011 instead of 2013 that I'm using here, but I will stick to my wave count. And I will explain it to you why I want to stick to my wave count, but I'm aware of what other traders are looking at, okay? This is what I recommend to traders. You count your wave, try to go into the mind of other traders so you may know also what they are thinking, all right? All right, so they will say this is the first wave, this is the second wave, and they will call all this from here all the way up here, the third Elliott wave. So for those traders that are using the reference point May 2011, first wave, second wave, third Elliott wave, all right? Okay? Oh, no. In fact, the third Elliott wave is ending here, all right? It's ending here. This is the third Elliott wave from here all the way up here. So first wave, second wave, third Elliott wave ending here. And for those traders, they will be saying that this is the fourth Elliott wave, followed by the fifth Elliott wave right here. Are you getting it now? All right, are you getting it now? So you see my wave count, all right? And you see the wave count of other traders, what's going through, okay, their mind, okay? So, but I don't want to follow those traders, but I'm aware of what those traders are doing, all right? I'm not discounting it, but I just keep my left eye, my left hand side eye on those traders, all right? Because they are counting their wave from a different angle. Say that way, they are counting it from different angle, from 2011 instead of 2013 as I'm doing here. So their first wave, second wave, third wave has been extended. So that third wave is 1, 2, 3, 4, 5. So their third wave is a complex third wave all the way up here, followed by the fourth wave and the fifth wave. So for those traders, they are calling this point here as the end of the fifth wave. I am calling this point, okay, the top of a flat correction. Let's change the color of that so you may understand. Okay, because this is the area wave theory applied to the forex market. Because I will be posting this video at 24 Forex Trader YouTube channel, because it is about a Mexican currency and also about the US dollar. We are talking about the US dollar in comparison to the Mexican peso. So I cannot put this video at 24 area wave. The best place is to put it at 24 Forex Trader YouTube channel when we are discussing okay, forex trading. All right, here it is. So this is the top of their fifth area wave. For me, this is the top of my fifth area wave. I disagree with those traders here, but in all cases, we will make the same decision, because the reason is those traders are expecting a correction to begin at the end of okay, their fifth wave. So they will be expecting either flat correction, either zigzag, all right, or any other type of correction, or a combination. All right, so we have okay, the triangle, all right, we have okay, the zigzag, we have the flat correction, and we have what we call the combination. Those are the four types of correction that we have. So those traders will be expecting a correction to correct. So you see the strange thing that is happening now, though the general discussion in the financial market right now is that the Mexican peso will become very, very, very bearish. But looking at this chart, remember that this chart is about US dollar against Mexican peso. So when we are saying that a correction will take place one way or another in the near future, looking at this chart on a monthly chart, we are saying, in fact, the contrary. We are saying that the US dollar will be weakening against the Mexican peso. So we can also deduct that there is a high chance that the Federal Reserve may begin again a new quantitative easing. Now, this video is very important for traders. It's an essential video for traders. So with this information, all right, we're looking at this chart, all right. Mr. Trump is elected as a president for the United States. All right, he's an excellent business person. I believe that he will be a very good president. Okay, all right. That's my personal view. All right, but the market was saying that if Mr. Trump is the president of the United States, the Mexican peso will become bearish, will be weakening against the US dollar. But now that we have done our area wave analysis, we are now dissecting the price action. We are looking inside the price like a needle, so to speak. We can see clearly that a correction is due at one point. Okay? Whether in 3 months, whether in 4 months, there will be a kind of correction. By all means, whether you are using the reference point of May 2011 or my reference point of 2013, I can tell you exactly my reference point. My reference point is April 2013. All right, you will expect a correction. All right, but talking about the future of Mexican peso is looking brighter, that the Mexican peso will be strengthening against the US dollar in the near future. But it does not mean that we just go now and sell the dollar against the Mexican peso. In all cases, we are following the price, as I said to you before. At this point in time, looking at this price action with the information that we have in front of us, this is what we can say to traders. But the wave count is dynamic. We are going one step at a time. All right? One step at a time. Remember this, sometimes an earlier wave trader will forecast that the market has stopped. All right? And he will be saying that a correction will begin. All right? If that correction is an expanded flat correction, it means that that financial instrument will go back above that top that the earlier wave practitioner was saying to the market. It's happening all the time. When people say, this is a mumbo jumbo, this earlier wave theory is a mumbo jumbo, you say that correction will begin. Ordinary investor will be speaking like this. You say that correction will begin. Here we are, the market is now going up. The Dow Jones is now 800 point up. What's going on? But it's just the B part of the flat correction that is now exposing, going above that top that the market analysts were focusing. So as the price continued to go up for a while, creating a new top, all right, people thought that, okay, what are you talking about? You foolish technical traders. And then the C part of that flat correction will begin 1, 2, 3, 4, 5 down. And then everybody say, what's going on? So don't use the area way as a science, use it as a guide, okay, and apply it like an intelligent investor. All right, this is what we are saying here. So you see now other trader counting here, 1, 2, 3, 4, 5. I disagree with them, but there's no conflict as such, because at the time that they want to buy, I want to buy too. Though our wave count is a little bit different, my top is here, their top is here. I will explain to you why my top is there. I told you already. So I'm going to stick to my wave count, which I explained to you. Though I'm sticking to my wave count, I'm also aware of what other traders are thinking. It's very important because I'm not the only person in the market, and I cannot just assume that, okay, I am the best area wave practitioner in the whole, okay, wide world, okay? We don't do that, okay? All right? So why, so I say to you that I count my wave, so first tiny wave, second wave, a third wave, fourth wave, and a fifth wave here. What I always do, all right? If you see that this apply Fibonacci extension to my fifth wave, this is giving me a bit of idea what's going on. So I'm watching a level of 138.2% Fibonacci extension level. That's the first resistance that we watch. It doesn't mean that the price will definitely stop there. The price can go above it. But as an earlier way trader talking about flat correction, whenever we see the price structure, we are saying, all right, this is the first resistance. So because if a financial instrument gold breaks out above the prior high, the first challenge for the bullish continuation is the 138.2% Fibonacci extension level. Therefore, this is the first key level that we are watching, but it doesn't mean that the price will definitely stop there. So when I apply the Fibonacci extension to my fifth wave, I can see that there were a bit of reaction. The market has acknowledged that 138.2% Fibonacci extension level, the level of 21082. 21082. I'm going to color it now into red. Remember that level is a very, very important resistance level. So at this point in time, we will say to trader, priority to bearish signal below 21082, and priority to bullish signal above 21082. Doesn't mean just buy above and sell below. It means that look for a bullish structure above that level and implement a top-down trading method if you want to buy above that level, and do the inverse below that level. All right, you see now? So by using the Fibonacci extension applied to my fifth wave, I'm happy with my wave count using the reference point 2013, the point when the Federal Reserve was ending the quantitative easing. With this forecast, I can forecast what is likely to happen to the US dollar and the Mexican peso because I'm expecting, okay, a specific price structure. We are discussing an earlier wave trader forecast price action of US dollar and Mexican peso. All right. So what I'm going to do now, I'm going to apply again going to forecast the end, the possible end. Remember, a possible end. The Elliott wave curve, Elliott wave analysis is a guide, my friend. It's not a magic one, all right? So, going to apply Fibonacci extension to the A part of my flat correction. So, from here down to this point, this is the A part of the flat correction. A, B, now we are expecting C. The flat correction, the expanded flat correction, is an ABC chart pattern. Okay, remember, we have ABC chart pattern, we have ABCD chart pattern, and we also have ABCDE, okay, chart pattern. All right. Are we going to have ABCDEF? All right, that's another question. All right, think of it. All right, so that is ABC, ABCD, ABCDE. So ABCDE is about the horizontal Elliott wave triangle. The ABCD, go to stochasticmatic.com. You'll see videos, a web page about ABCD chart pattern, a very powerful chart pattern. But when we are talking about ABC chart pattern, we are talking about Elliott wave correction. The flat correction is ABC correction. The zigzag is ABC correction. All right. So let's focus the end of the C part of the flat correction. So there is, okay, you know what I'm going to say. There is a high chance, all right, okay, that this currency pair, the US dollar Mexican peso, has a high chance, okay, to come down to the level 16351. That's the first forecast. 16351. That's the first target, which is the 138.2% Fibonacci extension level of the A part of the flat correction. The second forecast that we can make for the US dollar Mexican peso is that there is another target point is at 15767. 15767. Remember that. Does it mean that the price will definitely hit those targets? There is a high chance it will hit it, but there is a small chance that it may not hit it. All right. And the third target, which I say to trader, is that the minimum target that one will expect is the flat correction to come to the low of the A part of the flat correction at 17110. 17110. In fact, that's the first target because the flat correction is flat. So the minimum target that one should expect. So if you receive a sharp signal, price going down, be aware of the key levels here. All right. Okay. But minimum target is 17110 near the low of the A part of the flat correction. The next target 16351. The greediest target 15767. So if this Mexican US dollar Mexican peso reaches this level of 15767, there is a high chance that it will now start going up. So you may see probably next year either the Federal Reserve will come out and start another quantitative easing to the surprise of everybody. We may have a new Federal Reserve chairman or chairwoman, we will see, which will come out with a different policy, we will see. All right. But looking at this chart, using the Elliott wave principle, we can forecast that is a higher chance, contrary to the general belief, that the US dollar in the medium term, okay, will be weakening against the Mexican peso up to the level of 15767. If it reaches that level, there is a high chance that we may see another bullish trend for the dollar. So remember, the dollar may start strengthening big time against the Mexican peso in a zone of 15767. We are talking here about probability. We are not talking about certainty or guarantee. This is to warn gamblers, all right? All right, there are gamblers out there. So they do not sell their house or put all their hope and their wishes on this, okay, trading a video. By the way, this video is for educational purposes only. It's neither solicitation or an offer to buy or sell the US dollar against the Mexican peso. Okay, we get in there, all right? So this is it. All right? So we are talking about Elliott wave trader forecast price action of US dollar and Mexican peso. We have counted Elliott wave. This is my first wave. The second wave, contrary to the general belief, is a triangle, which a lot of traders will find a little bit strange because the general belief that the second wave is never a triangle. Don't say never in the financial market. Followed by the third Elliott wave, the fourth wave, and the fifth wave. We are now in a flat correction. A part of the flat correction is moved down. The B part of the flat correction at 138.2% Fibonacci extension level of the fifth wave. All right, and now we are expecting, all right, the C part of the flat correction, minimum target 17110, next target 16351, ultimate target 15767. In the medium term, we will expect the US dollar to be weakening against the Mexican peso up to 15767. And from there, we will expect the dollar to start strengthening, okay, against the Mexican peso. So probably in the first 2 or 3 years of Mr. Trump government, we may see the dollar weakening against the Mexican peso before it will start, okay, running away, running fast up. We will see. This is a forecast. This is our expectation. If the market is fulfilling our expectation, therefore we have an edge. But we will not impose our expectation on the market. All right. Federal Reserve decision, economy news can change the dynamics of a technical analysis. All right. There are more to this. I will be coming back to this discussion, and we'll be looking a little bit deeper and deeper. So you may say to me, George, what other traders that have counted their wave from May 2011 will be thinking now? All right. That's a very good question. That's a very good question. Those traders, though they are expecting a correction here, so remember that their fifth Elliott wave is this one, all right? So if I try to go into their mind, which I always do, all right, there is a mind game in the financial market. So I will apply. So suppose there will be another flat correction. We will suppose, so if this level stays, where I put my cursor, stays the high of this candlestick bar, because this candlestick bar is not yet closed, all right? So I'm using this point now as the high of that candlestick bar, but it's not yet closed, okay? If I apply Fibonacci extension to that high of to their, okay, fifth wave, this is their fifth wave. Those traders that are using the reference point May 2011, this is their fifth wave. But remember, this candlestick bar is not yet closed. All right. If he extended, that will change my forecast. They will be watching this level here, another resistance here at 138.2% of their fifth wave. That level is at 23096. Okay, this is the end of this tutorial. All right. If you have any question, suggestion, or comment, put in the comment section. I always read them. All right. Now, I may not reply to the trader directly, but what I do, sometimes I record another video to answer the question, or I will address, okay, the comment in another video. All right. So if you are, okay, an active subscriber, all right, you will know that, okay, I'm addressing, okay, the comment in the video. I'm answering, okay, the comment, okay, with another video. All right. So we wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders talking about Elliott wave trader forecast price action of US dollar, Mexican peso. In the medium term, we are expecting the dollar to be weakening against the Mexican peso before, okay, strengthening against the Mexican peso. Will the Federal Reserve start a new quantitative easing? We will see.